to thestockmeter.com here in the beautiful Black Hills of South Dakota. I'm your stockmeter, Brian Johnson. Beautiful day here. I will be spending, go figure, some more time outside while the weather remains nice. Supposed to get a little bit more nasty this week. So as I said, we've got one, maybe two more storms to probably blow through here, drop some snow on us before Mother Nature will truly allow it to become spring. So I will enjoy the weather while I can. I hope you do the same if you're having some nice weather where you're at. New week of trading out of options expiration week. We did have a volatile week last week. Lots of movement, both up and down, with really about one day. That was Wednesday, minus the gaps that we saw. Wednesday was kind of, muted, but otherwise, moves both down and up. Overall, looking at the charts, bulls have a chance to make a move here, but Bears, nothing broken from the Bears side as of yet. You can see here in front of us, I think the biggest talk of the town is going to be this potential inverse head and shoulders that appears to be setting itself up right now on this 60-minute chart. You can see the left shoulder, the head, and the right shoulder forming, making for very, if you will, sexy-looking inverse head and shoulders. This is about as pretty as it gets right here. It's if it will verify. Will it actually follow through? This thing has some room to move to the downside. So tomorrow morning, like I said, it's awful early. I don't have futures open. I have no clue what's going on come the morning time. So be watching. Remember, we have room to move to the downside back into this 11.7 mark for sure. Without a doubt, that would make, of course, the perfect right shoulder type of a look. Never works out necessarily perfectly, but your neckline's going to be up here around that 11.9-ish mark if you want to look for a trade come tomorrow. Will we gap up and above it to start the day tomorrow? Will we start back down tomorrow? It's really anybody's guess. That's why you need to be watching. Have your lines marked and have yourself ready for either one of those moves coming into tomorrow. If we can open the day more flat, that's never a bad thing. That gives you and I a really good chance to get a good feel for where the markets are going to go, as opposed to these heavy gaps up or down, which are always very frustrating unless you're already in and you happen to pick the direction correct. Then, of course, you're ecstatic. But otherwise, it's just very frustrating to see these gaps up and down. It takes a while to resolve themselves. So be watching this tomorrow. This is playing itself out on the SPX as well. Same type of a formation. Obviously, you want to be watching this. A little too early to really claim it is one thing or another. Tomorrow's information should give us a lot more or a lot better idea of where we may be headed. Look to see if it doesn't hold this 11.7 mark, though, on the way down with any bearish moves tomorrow. Dow Daily, don't see that same thing happening obviously here, but you see these two white candles moving their way to the upside, still stopping at or around that 11.9. Now, if we get above 11.9, the target's going to be right around 12.2 if the inverse head and shoulders is correct. But you're going to really want to watch this 12,000 area up here. This should be a good area of strong overhead resistance on any push back to the upside. This thing can play itself out in any way possible. This could be an A, B, C type of a look. This could be a 1, 2, 3, start of a 3. Really, it's anybody's guess in here. I would recommend that you not get sold. If you're an Elliottian and you like the Elliott Wave stuff, don't get sold on any one count right here. There's really no way to count this as it is. So we have potentially ABC, potentially 1, 2, 3. We don't know if this is over yet. Let's give it a day to try to see if we can't get a little better idea of where this thing could be going. For those of you that might be interested in knowing more about Elliott Wave, I've got it nailed down. On March 31st, that is Thursday, March 31st, I'll be doing my Elliott Wave webinar. It'll be held at 9 p.m. Eastern Time. That should give all time zones, at least in the States, a good amount of time to be available for it. And the cost on this first session, it might go up after this, but as the whole introductory price type thing, it's going to be $49. I don't have the click me type thing up yet on my site. I probably will by either the end of today or tomorrow sometime, so that you can just click it and sign up via PayPal. But if you'd like to be a part of that, that is March 31st at 9 p.m. Eastern Time. The cost is $49. You can pay via PayPal when I get the little ad put up, or you can call me or write me and we can do it over the phone, or you can send me a check if you prefer. It doesn't matter to me. And then it's a very basic to intermediate level course on Elliott Wave. So if those of you don't really understand it or would like a little one-on-one time with me, I mean, it will be a group session, but it'll be I'll do as thorough a job as I can, allow for questions at the end of it, and we'll just try to make it as good as I can for you guys. All right, so think about that, March 31st. So ABC could be a 1, a 2, a 3 type of a move down here. I can count it really either way. You guys can see that right in through here would be 1, and then we could have had a ABC 2, then a 1, 2, 3. This could be 4 before a 5 down. I mean, I'm telling you, you can count this anyway. This is the trick of Elliott Wave. You got to know. It's really helpful to know how to use it within your trading. That's what the webinar is all about too. Not only teaching you how to use it, but how to apply it to your own trading in what I think is the most safe way possible. Okay, so we will wait to see where we break tomorrow. You're going to want to watch, as I said, the 11.7 mark and the 11.9 mark. Those are my areas tomorrow to be watching. NASDAQ here is odd man out. This is the one that's just really kind of in the middle of nowhere. You can't see that same head and shoulders pattern. I mean, it is very, for lack of a better word, it's pretty ugly here on the NDX. I guess, this isn't the NASDAQ composite, but on the NDX 100, it's ugly right here. This thing is just staying in its downtrend. And from a daily perspective, it's just straight sideways. Pretty clear to me that you've got one of two levels, 2280 and 2200. If you really want to be on the more cautious side, these are the areas you want to watch for breaks, both up and down. This is stuck in the same scenario, though, from an Elliott Wave standpoint. Is it ABC? Is it 1, 2, 3? They all look that way. But this one doesn't have that same kind of inverse head and shoulders pattern that's so indicative of the rest of the other two markets. Here on the weekly, we did not reclaim. We closed below the 20-week. This is the weakest here. Closing below the 20-week that was a big move. Let's just say that was a big move for the bears to get that thing below and close below it by the end of the week. 2200, you can see it falling right back into perfect support though, so we still have work to do down here, even on the bigger time scales. Bigger time scales, not necessarily anything broken yet from the bull side. It's getting there, but not yet. It's just not there yet. SPX 60 minutes showing that left shoulder head, right shoulder formation. You want to watch 1260, you want to watch 1290. I think it's about as clear as that. You can kind of see that nice little inverse head and shoulders pattern happening. And if it looks pretty, I don't trust it. So in this case, it's almost too pretty. You'll want to watch 1275, you'll want to watch 1260. Those are your areas to the downside to watch tomorrow from a support standpoint. Here we are, same thing as the Dow, looking very, very similar. Can you even pretend to guess where my overhead resistance might be? Yep, 1380 way up here. No, I'm teasing. Right here, guys. It's pretty clear. 1300 to 1305. Really want to keep an eye on those areas for sure if there's any bullishness that returns to the markets into tomorrow. VIX daily, here was Monday, Tuesday, Wednesday, Thursday, Friday, stayed all up and around the 24 area, over and above the 24 area. That's good. You can slowly see this VIX creep up. Notice how we stayed here, 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 here. Now we made the jump, and we stay here, and I said stay above 1920. I'm more bearish on the markets. We got the bearish move, and here's the VIX again, spiking up and away again. So back down into here before I really start to feel comfortable with the markets kind of losing their, how would you say, their fear with what's going on in the world, in the local areas, whatever. Above 1920, this thing stays above that 1920 mark. There's still an air of nervousness within the markets. So we'll be watching, of course, this coming into next week too. We had a huge spike last week. Came right back down again, but the point is it's still staying at a high level. Apple 60 minute. Here's a nice little channel for you guys to be watching. Drew that in for you this week. Wanted you to take a look at it. I think it pretty accurately denotes what we're seeing right here in the markets. You can see we've got some work to do if you are a bull to get to the upside. Why? Because this thing is following the NASDAQ. A lot of the markets were up on Friday. Apple did not follow, not Friday. So what we have here is that sideways choppy move. I'm just going to make it right here, 337 to 340 and your 325 area. I think it's very clear if you're looking for a little longer term play one way or the other, and or you're looking to maybe take some profits on a long that you've been in for a while. These are all good areas to do it. We've given you some other ones along the way too, and you can see at this point they are all breaking down. Slowly but surely they lose their ground. Now, if we can get back up above this 340, I think 345, 347, very plausible. Very plausible to get back to. Apple from a weekly too, notice how it held this blue line. We talked about it for quite a while. Got above it, back below it. Got above it, back below it. Got above it, and then back below it for the third time. Third time was a charm. Came back to rest at around below the 20-week moving average. Not good for Apple at this point. This is quite a pullback. Your next lower level, though, really good support hanging out down here around the 315-ish area. But that's 15 points away, guys. Remember, Apple is an expensive stock right now. So even this little teeny tiny move on a chart is a long ways for Apple. That's why I'm telling you to watch some of those lower levels that we were talking about there. FAS 60-minute, we've had consolidation here, then a gap up on Friday to consolidation here. So it is still working its way up. This was very bad trading on Friday for FAS or FAZ. I do like it back below this 2875-ish mark to the short side and above 30 for your long. If you're looking at it from a 60-minute standpoint, you can maybe take a more speculative one above 2950, but it is extremely speculative. Let me just warn you of that. FAS then on the bigger time frame, the daily time frame here, you can see it's just trying to sneak its way above that 29 area. Once again, an area to get into, speculative again, but could actually, that one might work out okay tomorrow if you want to play that one tomorrow. So back up and above the 29-ish area someplace, you might be able to play that one back for 50 cents, maybe even a buck, into these higher levels. Then, of course, is my bigger overhead area. Then below us on the larger area, it's below 27 if you want to get in and hold for a while from a swing trader's position. FAZ, you can see us wander sideways here, and once again on Friday, just no play. I mean, we're stuck in a really, really tight range with the markets going basically nowhere. Here's the bigger picture, guys. Big channel setting itself up. Now, if you want to get more aggressive above 43, that's really aggressive, guys. I do not like playing stuff when it's kind of in the middle of something. I don't feel comfortable doing it. A very speculative play to the long side is 43. The more conservative is still above 46. To the short side, below 40. Those are your plays on FAZ if you're looking for anything coming into this week or even just tomorrow. Those are your areas to be watching for sure. Okay, let's see. That'll about do it. Let me just run through these really quick. These were last week's. I pulled these off of the subscribers list. These were stocks we watched last week, but because of the volatility both up and down, a lot of these did not move. We made our money off of the indices last week with entries on the indices themselves. Within the individual stocks that I had on there, we had a lot that just wandered sideways, and that's what these did, and I'm not going to wait for them. In a lot of cases I will, but I'm not going to wait for these. I've got other better plays on there. So Cell was one that we watched. We never got the break of this, but if you guys want a freebie, above or below these areas are still really good trades on Cell if you're willing to just wait it out. It's been stuck there for quite a while, for about 2 months now, but the break should be very, very good on it. So there's your freebie there. The Dole, this one also, we had a good short on it, but it gapped. See, the short was perfect on it, but it gapped down instead of ran down. At that point, I was kind of done with the trade. We didn't get much out of this one at all. GE was one we did play. We played that one to the short side underneath the 50 right here. Had a very nice breakdown and below this formation. And this one came down into our target right down here around 19. So we got in about 1975, I think was my short. Yep, 1975. Played it down into the 19 area. Some played it even a little bit lower. But overall, we made at least 50 cents off this trade last week. And now the information is pretty not for me to be looking at. This is what we were looking at right here. The lower support on some of these weeklies. They played out very, very nicely. Got a perfect bounce off of that when we got down there. PDCO on a 60-minute. This one as well wandered around for a while. We caught this one below 32. Some people took some profits down here, but even if you held to the end of the week, you still made money on it. Made about 40 cents, 30 cents, something like that, but the play was still good. So below 32 on this one last week. Now this one is off the market. SLGN just wandered sideways. We tried to play this one below 36. We never got an entry. It gapped way down to here and then ran straight back up again. So we never got an entry on this one. This one ended up being just a dead play all week long, as Cell was and some of the other ones were. And that's what we did last week. This is what I took off of last week. So we still have about 3, 4, 5, 6 of them. I think about 5 or 6 of them on this week's newsletter. Hopefully these will play out a little bit nicer than what some of these other ones did. But I want to show you from week to week what I'm taking off of my subscribers list, so you guys have an idea of what goes on within the subscribers list itself. Okay, we'll be back with you again probably tomorrow night. See you then. Bye.